Ever wondered how escrow accounts work? Well, let's break it down. Think of an escrow account as a bank account held with the mortgage company for you to pay your insurances and property taxes every year you have that loan. Now, what you are doing is paying with your mortgage payment monthly a portion of your homeowner's insurance and your property taxes. Depending on flood zones, you might be paying flood insurance in there as well. And what we do is collect that monthly into your escrow account. When your insurance policy renewal comes due and the insurance company is looking for payment on that, well, we receive that bill and we make that insurance payment for you out of the escrow account. Same thing with property taxes. Property taxes due at the end of the year. Well, we get that bill from the assessor's office. You get a copy too in the mail. But what we do is take that money out of your escrow account and make that property tax payment for you. Now, this is only if you elected to escrow your mortgage payments. Typically, we see that, yes, in fact, it is escrowed in majority of the mortgages. And this is a big benefit to you as a homeowner where you're not worried about making that insurance property tax payment every year, potentially missing a payment and suffering the repercussions of that. So in all, an escrow account helps you as a homeowner manage your homeownership. Now, at the closing, you will see on your closing disclosure when you're looking at breakdowns of financing scenarios that we are setting up an escrow account for you at closing. You'll notice we pay a year of insurances up front, so you're going to get a full insurance premium being paid at the closing. What that does, that covers you from the day of closing to this day next year with that insurance policy. Insurance always paid in advance. Now, in your monthly payments, you're paying a portion of that homeowner's insurance monthly, so that come this time next year, you have enough money in that escrow account to make that insurance payment. Now, property taxes are going to work a little different, where it's going to be prorated on your closing disclosure so that the seller pays for their portion of ownership in the year and you as the new owner gets to pay your portion of ownership for the year. You'll see the numbers for the escrow account set up on your closing disclosure. Again, property taxes prorated. Insurance is what we do is we collect 3 months of additional insurance up front. The reason being, if you were to close today, well, your payment is not going to be due until the first of the second following month. So if, say for example, we're in February right now, you buy a house, we skip March 1st, and your first payment is due April 1st. So what we need to do is with 2 of those 3 months, we're collecting for February's insurance, March's insurance, and then we have a 3rd month in there simply as a cushion so that in the event your insurance policy were to increase next year, well, we have the money sitting there to be able to make up that difference and not have to come back for you for a check to make up the difference yourself. So if you ever wondered what an escrow account is or why it's set up, how it's set up, hopefully this video answers your questions. If not, feel free, reach out. You've got our number and we can talk through all the details for your specific scenario.